Welcome, ladies and gentlemen, to another edition of our virtual online roadshow series here by SRC and Commodity TV. And we have today a good friend and special guest, Russell Starr, the CEO of Trillium Gold. Hey, good morning to Canada. How are you doing?
Hey, good morning, Johan. How are you?
Perfect. Thank you. Just in Austria. And all fine here. Yeah, great. Before we start, we just let the attendees here checking in and hope the internet connection is fine. So from my side, it looks quite good. That is okay. Before we start, of course, Trillium Gold, a great company, a little bit, let's say on the newer side here with us, but with a lot of potential, definitely. And before we start, just let me do some remarks here. As always, we are fully complying to the European, Great Britain and Swiss data security laws, so nobody can see each other. Everybody is anonymous here and nobody can see the email addresses. Please use the chat function to type in your questions, as we want to have, after Russell's presentation, a very lively Q&A session here. The whole event runs approximately 50 minutes to an hour, as you know it. And my name is Jochen Steiger. I'm the CEO of Swiss Resource Capital and the chief editor of Commodity TV for those who are the first time here. So I just see still some attendees checking in. Let me update this and see that everybody has the time to get in here. And as said, please use the chat functions for questions. Let me get up the slides here, and I would say, Russell, the floor is yours.
Great. Thank you very much, Jochen, and thanks everyone for tuning in. I apologize for the lack of haircut on myself. For anyone who is following what's going on in Canada, we are locked down until at least June, which includes all non-essential services. Frustrating. But hopefully the next time you see me, I'll be a little bit more well-groomed. Obviously, our forward-looking disclaimer, clearly I will be making some forward-looking statements, as all CEOs do. But look, let me get into all the detail right now. For anyone who hasn't heard about Trillium, it's not a new story in as much as Newman Todd, our flagship asset, had 55,000 meters of historical drilling done to it by the same guy who's drilling out Great Bear, Bob Singh. But it's new in as much as I joined in July, August of this last summer, and we restructured the company, we refinanced the company. And so as you look at it today, we have an extremely tight share structure, only about 52 million shares fully diluted. The basic float's about 38 million. So depending on how you look at it, we're about a 40 or a $50 million market cap company. But what is so incredible, and I still shake my head at, is people are selling down here and they don't understand or appreciate what's going on with the company. We have 3 drill rigs turning right now. We have about $5 million in the bank. We've drilled another 10,000 meters ourselves. So there's about 65,000 meters of drilling into the Newman Todd structure. And effectively every second hole, we're hitting very, very high grade. And the Newman Todd structure itself is fully mineralized from about 0.2 to almost 2 grams per ton. So in my opinion, in our geo's opinion, you're looking at likely the next mine in the Red Lake area. And for whatever reason, people just don't understand that gold is now recovering very substantially. Like gold's, I think, up about 100, 150 bucks in the last few months. You still haven't seen the generalists move into the gold space, but if it were me and I was looking at an opportunity like this with the share structure, with management owning close to 40%, and I should note, people should be aware of my insider buys. It's close to $200,000 over the last month and a half. This is a stock that, in my opinion, will be substantially higher as we continue to unearth, literally and figuratively, what's going on at Newman Todd. Retail owns about 50%, institutions about 11%. I don't mind that structure. We are very, very tightly held. A very large broker owns probably half of that retail chunk. And then, of course, management and insiders, which would take us close to 60, 65% of insider and really friendly shareholders. We upgraded our technical team. Bill Patterson came on board, and when he joined, he brought all of the guys that he knew from Goldcorp. Bill was actually running the exploration program at Koshner, which is right nearby the Newman Todd structure, about 18 kilometers away by road. And we now sit with about 200 years of experience in the Red Lake area, which is key because Newman Todd is slightly different than your typical Red Lake asset. We still have those uber high-grade veins that are famous in the Red Lake area, but we have that very, very large Newman Todd breccia body, which makes it very amenable to open pit mining, which is something everybody should be aware of, because obviously if you can start an underground mine with a nice big open pit, you're actually generating far more revenue far more quickly. We recently added Donna, who's former head of IR and Corp Dev at Franco-Nevada, which is obviously a household name. And then Ian McNeely, who recently joined us, will ultimately take over as CFO, and he has decades of experience as well. So effectively, what I've tried to do, or what we've tried to do, is turn a junior in market cap into at least a mid-tier in terms of execution, in terms of management team, and in terms of technical team. Because when you think you have a mine and you're going to be putting a mine into production, you want to make sure you have the team and the people surrounding it to execute at that level. So what do we have now? Forgetting Newman Todd, which, as I've mentioned, is just an exceptional opportunity in the Red Lake area. I mean, it's almost akin to someone, you know, valuing Battle North or Pure Gold at 50 million. It's kind of that nonsensical. We've actually amassed the largest land holdings in the area. Now, I should add that once they figure out how much Battle North and Evolution have, it might be a close tie, or perhaps they're slightly ahead of us. But effectively, above and beyond every other company, we kind of dwarf them in terms of our land holdings. And I think that's important because outside of the Balmer Camp, Pure Gold, Battle North, to a large extent, the Red Lake area was viewed after that, at least along the Confederation Belt, as a VMS opportunity. So base metals were what were being chased. But now that Great Bear has unearthed Dixie, and then you have Prospect Gold, which is much further north along that Confederation Belt, finding gold and tills. You have the Spring Pole potential mine. You now have all of these structures potentially bearing gold, which makes the land holdings that we have exceptional and very opportunistic. And quite frankly, for the first time ever, we're going to be commencing an exploration program on them, because when we actually acquired them to begin with, winter came around, and the last thing you want to be doing is boots on the ground when it's 40 below outside in Red Lake. So what is the Newman Todd structure? For many, this is actually going to be a new diagram. You know, a lot of people would ask, what was going on in 2013 when Bob Singh was drilling it? As I mentioned, he's now drilling out Great Bear's Dixie resource. Well, what Bob would have said to you is, look, I didn't have a structural model. I didn't understand what the structure was. I just knew that every second drill hole I drilled was going to hit high grade. And that's a really happy problem to have. But when it gets down to understanding what you're sitting on and being able to target structure, target mineralization, you know, see where you should be drilling, it would have been a weakness, not of their fault at all, just during what happened in 2013 to 2014, everything just sort of went no bid, and ultimately what should have been followed up on wasn't followed up on, and that unfortunate event for them became a really opportunistic event for us. And so you're looking at the Newman Todd structure now. We took all their historical data, all the historical drilling, and by the way, the core is in pristine shape. We hired a guy from Leapfrog who spent literally 3 or 4 months leveling all the data, putting it into the Leapfrog model, and then this is what was spit out. And what you're looking at, quite bluntly, is a 2 million ounce global resource. A 2 million ounce global does not equal a 2 million ounce 43-101. And so our job now is not only to take what the historical drilling has presented us, we need to extend that. So for example, one of the holes that we've recently drilled is right in the middle here. You want to pull all this mineralization together. And the only reason it isn't continued there is just for whatever reason they didn't drill it. And then as you can see, it's open along strike in both directions, and it's open at depth. There is one deep hole that they drilled down about 1 kilometer. So we know that this structure is going to be pulled down 1 kilometer. But what we've embarked on, and to be blunt, it's a little bit of luck, but also strategic acquisition on our perspective. We picked up the Rivard property, which is right next to us. And if anyone's heard me before, Rivard is a family-owned property for 3 decades. They ran around with augers and dynamite, and they literally blast the first 1 or 2 meters of the surface. I'm just going to take you to the Rivard slide to show you what they were looking at. They would blast these VG veins on surface, and they would recover. Literally, you're looking at gold they would recover on the Rivard property. When we acquired the Rivard property, and for everyone's knowledge, there's tons of gold still sitting at surface up there. It was family driven. They could never have mined it all just as a family operation. But what we acquired was a much better understanding of what we believe was going on in the Newman Todd structure. And you're seeing it for the first time ever in this model. These red dotted lines are Rivard veins, those VG high grade veins, cross-cutting the Newman Todd structure. And where we have these larger faults that you see, when those veins, the fault, and the Newman Todd structure intersected each other, you ended up with tremendous amounts of high-grade gold being dropped off. And so what you have, and what I was alluding to earlier, is this incredible opportunity of a 0.2 to 2 gram per ton massive mineralized halo in the Newman Todd structure being juiced and high graded by where these veins, these Rivard veins, intersect these east-west fault structures. And that gives you, quite frankly, a very, very realistic opportunity at an open pit scenario. So now you're looking at it from a bird's eye view. You can see all the historical drilling, and you can see what we've been trying to do. We stepped out here, we intersected the Newman Todd structure 150 meters away from where they originally thought it was. Wow, incredible. Now you're extending a structure that's already bearing a ton of gold. You can see that we've done some fans. We're doing fans across here, because if we can actually pull what would be a pit wall towards the Rivard property, while also mining high-grade VG-bearing gold, you get an economic scenario where normally you would just have a pit wall. And so if we do our job and we continue to hit these Rivard veins and we continue to pull what could be a pit wall towards the Rivard property, you end up turning what is a 2 million ounce global into a 2 million ounce 43-101. And again, we have work that we have to do ahead of us. But quite frankly, when you have that much gold in this type of a setting, as basically from 0 to 400 meters, and it's open at depth, and it's open along strike, and you control 2.5, now almost 3 kilometers of it, you're only 18 kilometers away from evolution and all of that mine infrastructure. You know, put 2 and 2 together, this is going to become something that gets mined by someone in the Red Lake area. And people always come to me and they're like, well, you know, Evolution, Battle North, I mean, that was tax loss sort of targeting by Evolution. They could take advantage of all those tax losses that Battle North had. But the other important factor that occurred in that acquisition is people don't understand that what's going on in the Red Lake camp is grades are dropping. And as grades drop, you have to run more rock through your mills. And so Evolution has quickly realized that in order for them to continue to mine as much production as they want and maintain their forward projections, they needed another mill. And that's where Battle North came in. And it's also where we become increasingly valuable, because those mills, which were historically sort of geared towards 15 plus gram per ton material, are now being retrofitted to mine and mill much cheaper, much lower grade rock. And that's what we're going to have in abundance at Newman Todd. And so if you were to take this structure and put it legitimately anywhere else in the world, someone would probably be mining it or turning it into a mine right now. But just because of our jurisdiction and where we sit, everybody's so used to these uber high grade gold intersections that it kind of was the ugly sibling, either the little ugly brother or the little ugly sister. But now that little ugly sister or brother is growing up and becoming very, very impressive. And that's what you have in Newman Todd. And that's why, you know, when we have a recent drill result where we get 1 meter of 60 grams per ton, you know, I would have loved 5 or 12 meters of 60 grams per ton. That's a world-class intersection anywhere. But so is 1 meter of 60 when you're stepping out and trying to test for structure, and you know you're not targeting high grade, you're just trying to test for structure. And so when we can test for structure and still hit extremely high grade gold, that gives us more and more confidence of ultimately looking at something that we could or someone else could turn into a mine. So what are some of the historical assays? I mean, you would have seen in yesterday's press release, 1 of 60. There's other high grade, but we've hit 7 meters of 15 grams per ton, which is a world-class intercept, plus 100 gram per ton intercept. That was in our very first drill program. You can see 1 meter of 29, 1 meter of 11.5, 6 of almost 9. These are great intercepts. It's just we happen to sit in an area where, for whatever reason, people expect 20 meters of 10 grams per ton. But everybody should appreciate that gold is not an infinite resource. It's a finite resource, and we're eliminating that uber high grade gold wherever we can. And as a result, you're looking for lower and lower grade material, and hence you need higher and higher gold prices. But guess what we have now? Higher and higher gold prices. So everyone needs to change the way they're thinking about Newman Todd. I often get these criticisms where people are like, well, in 2013, you drilled, take a look at this, 31 meters of 13 grams per ton. We don't care about that anymore. We need you to do it again. And how can you not care about 55,000 meters of historical drilling? Yeah, I'm just saying the historical drilling is incredible, and it's very meaningful towards creating a world-class asset. I'm going to quickly skip to our next project, which we are about to start drilling, and it honestly is a once in a million year opportunity. You're looking at effectively the Red Lake mine camp. You're looking at the Red Lake mine here, and right contiguous to it is the Gold Center property. And a picture paints a million words, and the million words are, I hope, 1 million ounces or maybe 2 million ounces, not words. But you can see that Gold Center is 300 meters away from where Evolution is currently mining. And we are about to test the shallower mineralization rate up here of what could be the continuation of arguably one of the most important prolific gold mines in the world. Again, when you're looking at a 30 to 50 million ounce market cap company, depending on the dilution level you consider, we're not seeing any value for this project. We're about to drill it. And if we actually hit the continuation of one of the highest grade, largest mines in the world, and just to give you context, it's 25.6 million ounces at 16 grams per ton, and we may have the continuation of it, and you're getting no value for that in your market cap. To me, this is what just becomes one of those markets where this is a once in a lifetime opportunity to pick up companies that really are advanced, such as ourselves. We have great exploration projects, which, I'm not even going to talk about right now because we haven't even done our early stage reconnaissance of them. But even just on Newman Todd and Gold Center alone, you have the makings of,
you are in. It's good. It's good.
Oh, just said I left the room. Makings of what could be a world-class gold mining and exploration company. So, I mean, truly, that is the opportunity. I've been buying as an insider. You can look at my insider buying over the last month. I put my money where my mouth is. I probably bought about $250,000 worth of stock. We already have substantial ownership from an insider perspective. I don't know who's selling right now. They're using anonymous, but that's the opportunity from a buying perspective to actually get long what could very well and should very well be the next gold mine, if not 2 gold mines in the Red Lake camp. And that's it, Jochen. I mean, I wish I had more to tell you. We're drilling 3 drill rigs turning. We're finding gold. We're hitting gold. We have a great team. We have a great structure. We have a cash balance to last us at least, another 4 to 6 months of aggressive drilling. And as a shareholder, that's what you want to be long. You want to make your money by the drill bit.
Absolutely perfect. Thank you very much. Can you just say something on the ESG points here, maybe, because I think this is also very important for investors.
Yeah, I've always been a big believer in this. An ex-fund manager that I used to cover, who's also very, very, very much aligned with ESG, spoke to her. There's a product, there's a few products that are available, but we've embarked with one that will make us, I mean, we clearly have always been very ESG focused, but we will become one of the few junior gold mining companies that is actually legitimately ESG compliant. Mm-hmm. And I think it's the beginning of a massive trend in the entire environment and industry. And we'd be very fortunate and very lucky to be one of the leaders of it, and we plan on doing that.
Fantastic. Russell, thank you very much. Then I stop the presentation here. Let me move to the chat function. Okay, 1 second. Okay, is Newman Todd and Rivard gold recovered by heap leach or will have to be milled? Maybe a little bit early.
Well, but you can kind of look at it from what else happens in the Red Lake area. I mean, effectively everything is crushed and milled, just because it is traditionally very, very high grade. And then probably, look, to answer your question, I don't think it will be leached. I think it'll be milled, crushed, and then some sort of a flotation circuit. I wouldn't be able to tell you if there are heap leach operations up there. I don't think there are, but never say never. I could ask Bill that question, but the vast majority of them, just look at what Pure Gold is doing. Just look at what Battle North was about to do, what Evolution is doing, and then you have your answer.
Okay, super. Then also a question from the same shareholder. Do you have any net smelter returns on Newman Todd, Rivard, or Gold Center?
So the NSRs in the area are basically universal, and they're anywhere from 1.5 to 2. And it's just it's funny. Almost all of them are to 2 or 3 specific families who have been up there for decades. So yes, basically on everything, it's 1.5 to 2%.
Okay, then also the same shareholder, he must be really having some nice share packages here. What is the timeline for drilling on Leo?
Leo probably, look, our view is that where we want to focus is the Confederation Belt. Leo is maybe 20 kilometers to the south of Dixie, and there is a pretty big mag target there. It's just, we don't, if you were to go back and look at all of our property packages, where we want and will spend our time is in between Dixie and Prosper, just because of the amount of interest and what other people are seeing. I think Leo is probably a next year opportunity. We've already got so much drilling going on at Gold Center and at Newman Todd, and quite frankly, bringing in a 4th drill rig right now probably isn't smart. So next year, I think, would be the best case scenario.
Okay, and again, the same shareholder.
Lots of questions.
Yeah, it's great. When does the insider buy window open up again? Because you said you bought last week. I bought this week also. I bought also last week, but I'm not an insider. So are you in a quiet period now, or are you still allowed?
So it's illegal for me to say anything on that from Canadian securities laws. I'm going to just plead the fifth on that one.
No problem.
But I have been buying, and I'll continue to buy whenever I can. So
yeah, absolutely. So then a good guy I know from Zook here. Question. Curious to hear about your 2021 plan and budget. Is it fully financed? And how is the drilling advancing? And when can we expect news flow, of course?
Well, I mean, you literally just got news flow yesterday. You're going to get more news flow, and you should have continued news flow. The assay labs were extremely backed up, but we've been drilling and we'll continue to drill. So that was like 5 questions in one. $5 million should last us easily 6, 7, 8 months, depending on how we run our drill programs. We had always budgeted for a 40,000 meter program, and we've done about 10. So there's still 30,000 meters to go. In terms of financing, junior companies always need money. I prefer to raise money when the stock's going higher rather than lower. So whether we raise in 2 months, 4 months, 6 months, or 8 months, I don't know the answer to that. What I do know is the gold price is rising. Our share price has finally picked up a little bit of a bid because all the backups in the labs that were really dwarfing and hindering our opportunity have now been resolved. So you should see, I mean, we just got 5,000 meters. You should see at least another 2,000 or 3,000 meters. And then obviously we're drilling, so you'll see continuous drill results coming. And then we just have to manage our budget and our cash flow as best we can with the 5 million, which quite frankly is quite robust versus many companies in the space, and drill, generate value, and then look to finance when before hedge funds start shorting us. How's that?
Okay, good. Then a question from a shareholder from the Zurich area. How many companies have shown interest for your data room?
We talk to mid-tiers and majors all the time, and almost universally they want access. So look, Newman Todd, it's going to be a mine. We just have to keep drilling it. And there are very few projects that are going to be mines in this world. And again, I go back to like, I don't know who's selling. I don't know why they're selling it, but I can't think of probably a less intelligent time to sell a company like this with what we have and what we're showing the market.
This is why I found it more intelligent to be on the buy side.
My problem is I never know when to sell. Well, I won't sell until we sell the company, but so
exactly. Oh, sell the company. That's a keyword here,
well,
because there's the question: what is the exit strategy?
Sell the company, sell Newman Todd and Gold Center, maybe spin out the others. If I was any one of the bigger companies operating in the area, we would make a very appetizing target because our shareholders have made this very, very cheap for the market. My job is to turn that around. The cheaper we get, the more appealing we become, and the less money we're all going to make because of people who aren't paying attention to what's going on or just don't care or want to push this. I don't understand this market anymore. Juniors are at an all-time low from a historical perspective versus almost every index that exists. And the only people we can point fingers at are ourselves because we're the ones doing it.
Absolutely. No, that's right. It's really not understandable this low valuation. Yeah, let's talk a bit more on the projects here. First of all, what are the drilling costs per meter is a German shareholder asking. And the same shareholder is also asking, you're speaking about open pit opportunities, but deliver narrow veins in a depth of 200 meters plus. Wouldn't there be not too much overburden for an open pit mine?
So bluntly, that's absolutely incorrect. All the drilling is from surface down to 400 meters. Some of the recent drill results are deeper intersects, like the one of 60, I think was around 300 meters underneath that lake, but that's because we wanted to test the mineralized structure down deeper. Almost every single area of our structure is mineralized from surface down to 400 meters. The key right now is whether or not you can target high grade to turn it into an underground mine as well. And then it becomes not a 2 million ounce open pit operation, but maybe a 3, 4, 5 million ounce open pit and then underground opportunity where you're targeting high grades. So you've got to go look at all, like you're only seeing a fraction of the historical drill results. There are 65,000 meters of drilling with gold intercepts from, collaring and mineralization down to 400 meters. You saw the block model. I don't know if you could pull it up again, but it's from surface down to 400 meters. And then what was the other question? Sorry.
What are your drilling costs per meter?
Oh, about anywhere from 150 to 200 bucks per meter. It depends on what type of structure you're in. The Newman Todd structure, if it can be breccia upon breccia upon breccia, and sometimes you go through a few drill bits, which increases the drilling cost, but 175, 200 bucks per meter.
Okay, super. So then let's come to your, no, hang on, we are just there. Exactly, that's also a question from my side. How did you come to such a large land holding? I mean, you have the evolution there, you have other big companies there. How was it possible that you came onto that? I mean, that's amazing.
We're smart, we dream big. Every company I've been involved in, I remember Caden, and I couldn't believe that Goldcorp wasn't buying the land up. Majors think in a production sort of perspective, and juniors today have really struggled to be capitalized, and so they've been unable to do anything other than maybe drill 1 or 2 holes, and they don't have the share currency or whatever to do deals. I can tell you that there are decent assets around us where we've tried to merge with, and the management teams are so sleepy, and it's almost like they're running their own sort of stay being paid company. Our job as a junior is to become a mid-tier or to become a major. It's not to finance once every year, drill a couple holes, and then hope to keep the lights on. Yeah. So we took advantage of really sleepy companies that weren't doing anything, picked up big land packages, and we would continue to do so because, I mean, this is a jurisdiction where there could be 5, 6, 7, 8 more mines in the Red Lake area. It's loaded with gold, and it's just a matter of creating the opportunity by executing with the drill bit and then making smart acquisitions.
Okay, so there's also a question here again from the Zurich investor. I have the same question. As we are talking about your super high grades on the one hand, do you have also the possibility, let's say, to bulk mine with lower grades, for example?
Well, that's what an open pit would be. Absolutely. I mean, your average grade would be between 1 and 1.5 grams per ton, but in any jurisdiction in the world at this gold price, from surface down to 400 meters, that's economic. That's beyond economic. Where it gets complicated is, like I mentioned, can you target high grade at depth? Follow that high grade, because then you turn what was an open pit opportunity into, let's start as an open pit and then start mining underground. And if we can actually get into that type of a scenario, this is a 100-bagger, not a 10-bagger.
Okay. If we look at your historical data, what was like the average depths they have drilled in historical data in comparison to the 1 kilometer hole you did, in addition to
we didn't do the 1 kilometer hole. They did. So 99%, 99% of all their drilling was from surface down to 400 meters, and they drilled one deep hole and intersected the Newman Todd structure and high grade down 1 kilometer. So, I mean, look, we could be drilling kilometer holes and extending the Newman Todd structure down to depth, but why would you want to do that if you can target just as high grade near surface and turn what is a very, very manageable global opportunity into a 43-101 compliant opportunity? That's what we're trying to do.
Okay, so that's exactly one of my questions also. When do you think you have 43-101 compliant resources? Next year?
Look, if we keep on hitting a gram of 60 when we step out, sooner rather than later. But I think, being realistic, you should be looking at, year end as an opportunistic timetable for something meaningful for the market. But again, like, people need to remember, Caden didn't have a 43-101 and we were taken out for $205 million by Agnico. The market is what's causing the problems here, not us executing. And yes, the assay labs were slow, but we just put out great drill results and someone is still selling. What are you looking for? It's almost like the market is only looking for quick turnarounds and trades. There are very few investors. If you're an investor, what better opportunity than someone who has 55,000, 65,000 meters of drilling, hitting high grade everywhere, likely turning something into a mineable opportunity in maybe one of the most prolific jurisdictions in the world, surrounded by other world-class opportunities. This is what I'm trying to get across to people. And 2-3 months ago, the gold price was at $1,700 and no one wanted to take a meeting. Red Cloud has a research report on us with a $3 target, which probably is on the low end. I know another dealer who's coming out with a target, but until people start buying and investing, we're kind of stuck in the world we live in, because we're not crypto, we're not cannabis, we're not psychedelics. But I'd like to remind everyone that psychedelics and cannabis are agricultural products, and giving a psychedelic company $1 billion market cap when they have no revenue, that's dangerous. I wouldn't want to be long that stock. So
me too. That's really sportif, I would call it.
yeah. And look, I'm not saying those aren't interesting areas to invest in. I'm just saying the world isn't being sensible about where their investing dollars are going. Like, I'd rather buy something at the bottom and wait for it to go higher, and maybe it goes a little bit lower, than buying something at the top when it's almost assuredly going lower.
Absolutely. I'm fully on the same side with you. Let's talk about Gold Center. You said that you
Sure.
are only 300 meters away of Evolution. And I saw also in your presentation, Evolution is doing a 100,000 meter drill program. Let's assume they are super successful. Do they still need you there?
Absolutely.
Okay.
Every gold mine needs more gold. You got to remember the three least invested in commodities in the world, meaning the ones with the largest supply deficits, are in order, I believe, copper, gold, and silver. There's been so little money spent on this sector, copper sector and silver sector, that all of the majors are in dire straits because their project cupboard is basically empty. Their production falls off a cliff. So if Evolution can extend their mine another kilometer and pick up something that they're already basically inches away from mining for no value, like our share price, we're getting zero value for Gold Center, and they give us 30 million bucks. I'm going to have to take it. Why? Because our shareholders aren't taking our stock price any higher, and Evolution has me bent over, sideways because there's so little interest in the space, and they're the only buyer. What I'd love to have is people paying attention to Gold Center, taking our stock price higher, helping us leverage Gold Center. So, I mean, I don't know when it's going to happen. I think it is a matter of when. I think clearly that mine extends onto our property. We've got to hit mineralization, and then let's see what happens. Maybe at that point, funds start paying attention to us because we have realistically an M&A opportunity. So I don't know.
Okay. Would it then not make sense, let's say, to concentrate a little bit more onto Gold Center and maybe put one more rig in, or let's say more meters?
No, I think you want to hit first before you spend too much money. So let's hit first, then we hit, and then the fun starts.
Yeah. Okay. Good. Love it. That's a plan. Absolutely. We saw in your financial slide, what institutions are shareholders of your company?
Well, to be honest with you, I don't
say.
Well, to be honest with you, I don't know exactly, because I think even now, whoever's selling using O1 is maybe an institution selling who's like trying to flip into some other hot commodity. Who knows? I actually can't tell you. That institutional number may be zero. Like we might only be retail now, because when gold was going from 1900 down to 1680. A bunch of the insties, I just know it because I know the way they trade, just blew it out. They didn't care what price they were blowing it out. They were like, I'll take a $5 or $1 million or $2 million loss because I just made 20 million on my crypto play, right? So institutionally, let's make it easy. Whoever is still there as an institution is clearly a long only institution betting on the assets and the management team.
Okay, super. Do you think that was one of the reasons why the stock price went from like 250 down to $1?
Yep. Just funds blowing it out, not calling you, not asking to try to find a block. I mean, look, the world is anonymous now, right? One of the worst things the Canadian market and any market ever did was creating O1. And then of course in Canada, we arguably have the worst short rules ever. So you have almost an unobstructed way of market makers and people selling as they see fit, to the detriment and without protection for smaller companies. So all I know is that I've been buying, my friends have been buying, and we just continue to buy.
Okay, super. Then we saw on your financial slide, you have 3.1 million options outstanding and 11.2 million warrants. What is, let's say, the exercise price, average exercise price, and the maturity for that?
Well, the warrants have another 3 years, I believe, left in them, and they're almost all held by insiders. The warrants that aren't held by insiders are at $2.60 off the $1.70 financing. And if and when insiders needed to, we could bring in another $2 to $3 million to the company just by exercising our warrants. Management options are in management and my team's hands, and those I've never personally been with a company where a management option has been exercised before its 5-year expiry. People just wait until they expire, and then you exercise them, or hopefully your company's taken out. I hope that answers your question. So
absolutely.
Yeah.
So let me see. Yeah. Let's come back to Newman Todd also. You said that like a 2 million ounce global resource you can see out of the historical data.
Yep.
How did you come on that? Do you have a technical, let's say,
it's modeling. It's
IT
it's a computer program.
Okay.
No,
it's a computer program.
Yeah, it's Leapfrog. So we hired Andy Abramson, who was 3rd or 4th in command at Leapfrog, and he put it all together. And then we hired a resource geo to model it. And so now our job is to continue to drill to turn what we have. And it's a lot more gold. It surprised the heck out of us. We have to figure out a way to turn that into a 43-101. And we're doing that by stepping out, drilling Rivard veins, and trying to add context to it. And if we can continue to hit high grade as we have in VG, we will do it. It will happen. And so that's our objective right now.
So VG is visible gold also for our viewers here. It's a short form. How important is that visible gold when you do the drilling? What does it tell you geologically?
Well, in Red Lake, it's typical. It's Red Lake is world famous for the VG bearing veins, and we just happen to have an entire property next to us with that context. And it's, if you can follow those veins, you have mines. Like the Red Lake mine is a mine that followed veins, very, very high grade. You know, I remember when Royal Nickel, who I was an advisor to at their Beta Hunt mine, hit their VG. You know, you end up with clusters, you end up with bricks of gold. It can be incredibly important, but your job is to continue to drill it and hopefully find it. And as long as we keep on finding it, that's money. It's why we're doing what we're doing. We just happen to have a very interesting scenario where we have a large disseminated gold body in Newman Todd, where the vast majority of it doesn't contain VG. It's very low grade in a breccia body. But if you can hit these high grade pods, you turn it into a very, very, very meaningful mine in the Red Lake area. And so, yeah, VG, it's VG plus Newman Todd that gives us the open pit opportunity.
Okay. With the open pit opportunity, would that mean that you say, for example, with Gold Center, you would sell this to Evolution, or could you also imagine that you say, hey, we're going to joint venture and do that together? Could you imagine?
No, maybe hard to explain. Right now we have no leverage because our market cap is so low. And like I said, if I was Evolution, you know, here you go, here's $10 million. We'll take that property off your hand. Then the investors scream at me, you should never have sold it for 10 million bucks. But the problem is no one's buying our stock and taking it up higher. We don't have the leverage. We don't have a dark horse in our company, because investors have been chasing, you know, the flavor of the month. So, look, I don't have a crystal ball. I can't give you that answer. We need to hit gold at Gold Center, and then I'll be able to give you an answer. But right now we have no leverage, none.
First,
we hit gold, we have leverage.
Yeah, exactly. Do the homework and do facts.
Yeah.
And then move forward.
Start with the facts, and then we'll hypothesize. Right now, it's too difficult to hypothesize. Look, what I can tell you is it's worth a heck of a lot more than zero, which is what we're getting for it in our market cap.
Yeah,
that I can tell you.
So there's a lot of upside potential, and this is what we love.
Continuation of one of the largest mines in the world. Look, the last company that sold in the area called Gold Eagle sold for $1.5 billion to Goldcorp. That's what we're drilling out. That's the opportunity we're drilling out. We're getting zero for it. So this market makes no sense to me. You know, we'll be announcing the starting of the drilling soon. If we hit, you know, what's a $1.5 billion opportunity in 2008 worth in today's dollars? Not nearly 1.5, because investors aren't speculating the way they used to, but it's got to be worth more than zero. So
definitely,
hopefully a lot more.
Absolutely. Okie dokie. So let me check here. I think we answered all the questions. That looks really good. Also, my list is empty now. Well, Russell, thank you very much for a great presentation. And
thank you.
150% with you. You guys are heavily undervalued. This is why I invested also. And as you know me, I'm a long-term shareholder because I see the same target and objectives as you do. And I think we have a beautiful, opportunity here with a lot of upside potential, definitely. Russell,
I agree.
Thank you very much, and I wish you really all the best for that. And we look forward, of course, to your upcoming news flow. Maybe this week, next week, already the next news is coming out. And still 30,000 meters. That is a lot.
Yeah, I agree. Lots to come.
Super.
Lots of fun to be had. All right, Jochen, thanks so much.
Thank you very much. Thank you. Yeah, ladies and gentlemen, thank you. That was Russell Starr, the CEO of Trillium Gold Mines, in our virtual online roadshow here. You heard it. A big opportunity, big buying opportunity here. And as we always say, buy low, sell high. That is really the case. And here you have the opportunity. I mean, to have such a company in the Red Lake district, the direct neighbor of Evolution, what do you want more? And they have already proven that they can drill and hit, and they found fantastic drill results. They have really 65,000 meters in historical data. This is also something which is a lot of times really underestimated the value, because with the historical data, you have a great orientation where to go and where to drill. And I have a very good feeling that we will see a lot of news flow here soon from the company. And to be honest, I bought also today, and I bought last week, and I bought the weeks before, because I'm absolutely, Russell and myself, we know each other long time, and I really fully believe into him. And also they have the money to do so. And I would suggest you really have a very good eye onto this company. Do your homework, do your research if you are not already a shareholder. And this is a great opportunity. Thank you very much for joining us today here. The replay will be available tomorrow approximately by noon. And we wish you all the best. Stay healthy. That's the most important thing. And I say ciao and bye-bye from Austria. All the best.
Bye-bye.
Thank you. Bye-bye.